Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report. In tonight's video, it's going to be very short. There's virtually nothing going on from an economic viewpoint. We'll look back on yesterday, which had a very robust rally. And once we've broken over 4,000, this thing is just running big time. We did see the S&P up 1.4%, the NASDAQ up 1.7%, and the Russell lagged again, only up 0.5%. The spread between the Russell and the NASDAQ is continuing to contract as the large cap tech stocks are taking back their control that they once had. And I talked about this phenomena over the last several days as I expect to see the NASDAQ move up toward the all-time high on the NASDAQ futures and ultimately the cash as well. So we had a really strong day yesterday. The market moved up into that 13,600 handle. I'll go through all the details here in a few minutes on the technicals. As we go to Tuesday, there's really nothing to talk about. There's no news coming out. There's nothing really material that is likely to come out of any type of market sentiment other than maybe another big speech from Janet Yellen like we got yesterday. I just want to address that for just a minute. Yellen was talking about an international tax on any company that is a multinational. What they're doing is trying to take the international element, and the tax planning by some corporations, I think, is probably not a terrible idea to put something like that in play. But there is definitely some things that are going to have to happen before that's going to be realistic. It's possible that a lot of these companies are willing to pay some taxes just to get in the middle of these trillions of dollars of stimulus. I just want to address that as well, and I'm going to go into a lot of detail on Wednesday's live stream, but I continue to see some areas that I'm going to talk about in the WaveTech and Portfolio Expert live stream on Tuesday at 3:30 New York time. I'm going to discuss how to do some ETF hacking, as well as looking at some of these stimulus stocks and how to build some portfolios around that. I think there's going to be a fair amount of cash flow. Even though a lot of these companies have already moved a lot, there's going to be more to come as we're starting to see further rotation into some of the areas. And one of the other things that happened today is we did have a substantial amount of buying in our database. We had 1,608 buy signals and only 95 sell signals. That pushes the percent bullish up to 38 and change. I'll go through those details as well in a minute, but we're seeing that traction continue. And I talked about this going back nearly 2 weeks ago when we printed down below 16%, that I thought we'd hit the bottom of the database and therefore the bottom of the market, and we'd start to see some traction come in play. And we definitely have seen that. But there's still some things that we're going to have to address as we go through this week. Most of the fundamentals that I think the markets will focus on this week will be on Thursday's session. So let's go ahead and take a look at the charts and see what they're telling us for Tuesday. As we go into the WaveTech database, this is what it looks like when you're using Portfolio Expert and WaveTech within each other. You can actually embed the products within, and so it really makes it very powerful. What we want to look at here is the percent bullish has moved up to 38.19. As I mentioned in the opening comments, we had 1,608 new buy signals, only 95 sell signals. So we have bullish ratios, and we continue to get this traction. Now the key numbers to watch as we go through the database is at 42%. We get above that level, that's going to set the tone for a further move, potentially up into the 60% level. And as I mentioned in last night's video, I ultimately expect this to move into 80–90% level like we've seen in previous rallies. I think this traction will continue as more stocks start to come in to trend mode on a short-term basis. As I've talked about before, our intermediate term trends right now. If we go over to that level, you'll see are currently at 75% long right now, 75.3. So there's actually 12,472 symbols that are in trend mode on an intermediate level. And what this means, these are symbols that have holding periods of 220, 240 days, which is the better part of a year. Also, these positions are only about 40% through their holding period, so there's quite a bit left. There's at least 120 to 150 days left in duration during this particular market cycle before we're likely to begin to see some rotation. So as we go through the next several weeks, I'm expecting to see this maintain above the 68% level, and it's possible that we'll see further traction on the intermediate level. Daily database gets above 60%. First market that I'll cover tonight is the S&P futures. They are currently down 775. As I mentioned in the opening comments, we did get an RXT sell signal yesterday. That suggests that we will trade back toward at least an S1, S2 on today's range. As we look at the daily market grid, S1 is 4057, S2 4046. So far overnight, we've been to 4057, right at S1. It's possible to see a little more weakness, but we should trade a minimum between S1, R1, and I'm expecting to see some expansion on the downside, possibly trading down to 4046, which is S2. So an R1, S2 level is likely just because of this RXT sell signal. As we look at the PPMs, though, we'll see that they are now all that PPM 1 and 2 are now in trend mode and expanding. PPM 1 at 0.40, PPM 2 at 0.30. When we're in this type of position, sometimes the downside on an RXT sell signal will be somewhat muted, but the configuration suggests this is how it should unfold today. As we go to the SPX, you'll see the RTX sell signal was much more pronounced than it was in futures. The RTX number was 4046. The close yesterday, 4077, substantially above that. But we're seeing this expansion to the upside. S1 is 4069, S2 4060. So this may suggest that we'll only see an S1 number in the futures, but this should be the downside limit. It's possible if volatility kicks up a little bit, we could see an S3 on the cash, but my expectation is an R1 S2 for today. We printed 24083, and today's R1 number is 4086, so that would be a retest of yesterday's high. There is a possibility that it will continue toward R2 4095. It's just a few days ago that I put a thumbnail out for 4100. It's amazing that in literally 3 sessions we're almost there. Let's take a quick look at the weekly range to see what's happening there, because this is going to come into play. The weekly range suggests that R3 is 4096, RXT for the week is 4120. This is a possibility, especially with the PPMs now starting to really accelerate. PPM 1, 2, and 3 are all in trend mode. PPM 1 at a plus 0.93, PPM 2 0.62, and PPM 3 0.66. And this is important to understand because we're seeing the beginnings of an acceleration to the upside. This market is nowhere near its top at this time, and I showed you some numbers last night on the Fibonacci ranges suggesting that a move toward at least 4,200 on a short-term Fibonacci projection, but more likely we're heading to 4,600 plus, and that may just happen much faster than we think, since basically 100 points have only taken 3 days to occur. So this could start to accelerate very quickly here. The next market that I'll cover is the NASDAQ futures. They're currently down 6 handles, very quiet night, 13,579 last. We did also get an RXT sell on the NASDAQ futures. RXT yesterday, 13,547. The close, 13,585. We are seeing some minor weakness. S1, S2 would be the target, a sideways type range for a couple days. That suggests 13,536. We haven't quite reached that yet tonight. S2 would be 13,482, and it may take a couple sessions to print those numbers, but we should see an R1, S2 for today. R1 is 13,634. We've had a high of 13,622 overnight, so we've satisfied that. Just like with the S&P, though, if we do take out the R1 number, then we're going to see a move to at least the 13,689 and ultimately moving up toward that all-time high that I talked about at the 13.8 level. I'll get into more details as we see the pattern that unfolds over the next two sessions. Quick look at the weekly chart on the NASDAQ. This is important to understand. Yesterday we did get up to the R2 number, 13,641. We had a high of 16,622, so we're very close to satisfying that. We are likely to see this 13,798, and the highs that we saw way back, the highs that we saw in February was at 13,890. So that's going to be our target, and I believe this market will accelerate. We'll see a next leg up, and these moving averages are the key here. The 10-period moving average at 13,135 is going to be major support for the next couple of weeks. Briefly, I want to cover the Russell versus NASDAQ spread. I've talked about this in great detail over the last several months, and I'm seeing this thing about to break down. We're very close, another session or two, and we're likely to see a further contraction, which means the NASDAQ is going to continue to lead the way up. This does not mean that the Russell will go down, but it does mean it's going to continue to lag as the rally happens in the S&P and in the NASDAQ. I normally don't cover the Dow Jones, but we're seeing overperformance there as well at the moment. But the Russell has definitely been overplayed, and we're still going to see some contraction in this spread over the next several sessions. The final market that I will discuss tonight is gold. Gold continues to perform well on a closing basis. We're staying above those moving averages, the 10 and 21 period moving averages. They are currently at the 1723.50 and 1724.80. This should be the bottom of this pattern. We should move toward this 1750 level, which is the 40-day moving average. We're seeing PPM 1, 2, and 3 breaking above their first, second derivatives. PPM 2 is actually starting to accelerate. These are all very encouraging situations. As I mentioned in the weekly chart last night, the 10-period moving average is going to be substantial amount of resistance in this pattern. That's currently at 1751. So I don't see us getting, we're up 7.7 handles right now, but that's going to be a major resistance number. Also, we have R2 at 1749, 10-period moving average down 0.66, which suggests there's only a 30% probability to get above that on a weekly basis. If we did trade above that 1750, 1751 level, I would expect to see a reversal from that level. I don't see it holding above that level as we come in to the end of the week. But it's very early in this week. We could see it spike up towards the R3 RXT number, which would be 1759, 1769. There's currently only about a 30% probability for that to occur. This will complete the video. We'll see you at the WaveTech Portfolio Expert presentation tomorrow at 3:30 New York time. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.